All right, guys, I'm monitoring a position on gold. I'm looking to buy this again back to the upside. So I'm going to go ahead and look for my first entry there. Right, guys, so going long on gold right now on this breakout. It is pre-London session, which means I'm looking for that volume to kick back into the market for us to jump on the back of. So I'm going to go ahead, tuck my stops below the low. And what I will be doing with you is adding to the trade, looking for it to pop up higher. So if you look at this on the hourly, we broke out yesterday to the upside. So if you go watch previous videos of mine on the channel, you'll notice that I have been buying this to the upside, both technically and fundamentally driven for this to trade higher. So with you on the video right now, I'm going to go ahead and target, let's take one of these levels. I'm going to target yesterday's high of 29.46, and that is 100 pips from where we are. So we're going to go ahead and do that together. So before we add to this trade again, like I have had a couple of questions of you guys already asking, I need the market to break a significant high point. So what that means is we can see this level of year has been a very good level of support, very good level of resistance once the market broke back below. Once we break back above, and that is 29.39, once we break back above that price point, I will then use that level to then trail my risk of my current positions, but then also use that level to add to the trade. All right, so I'll be looking for that to trade higher. So stay tuned. So a nice little break there. Volume is picking up. It is 8 o'clock in the morning London time. So volume is picking up there on gold. Beautiful push there. So once we break above 29.39, I'll be using that as, the line in the sand, shall we call it, for me to go ahead and add to the trade. I will then trail my risk. So what that means, my initial risk is then off the table, and I can go ahead and add risk to the trade. So a nice little push there. Great 15-minute volume kicking back in there. So what I will do, I will start to trail my risk below this wick that we have over here. And I'll get the order window open for us to add another position. So what will need to happen, we'll have to have a break and closure above 29.39. And that will be a perfect place for me to add to the trade. And again, while doing so, I'm trailing my risk on the way up. So that means I'm reducing my initial risk. And why do I do this? So if I'm wrong, I want to be wrong quick, right? I want to nip it in the bud. I want to get it over and done with. However, if actually in my strike rate, this just so happens to be one of the winning trades, I want to then add to that. Right? I want to add to my winners. So looking for a break above 29.39. Let's move this out of the way for a second. So a break and closure above 29.39. Bit of volume there, bit of a spike. Nice little push there. So if we close above 29.39, I am going to add to this trade. Start trading the risk. Order window open. Currently about 30 pips in profit on the position. I will look to trail my risk once we close above 29.39. Price really wants to try there. 15 looks great, so we've got to give it some time. But look at that, we're gonna break, come on. 29.39, and I will add to the trade. I'll start trading some risk there. So about $400 in profit right now, looking to add to the trade. And again, looking for the highs of 29.46. So breaking above 29.39 there, guys, as expected. If we have a closure above this, excuse me, I'm going to go ahead and add. Look at that, 29.40. Wow, volume coming in there. Let's close this order window for now. Volume flying in there. Big push there on gold. Wow. Flying. 29.46 is the ideal target. Obviously, I'd love for us to come and retest this 29.39, and I'm gonna add. So let's keep that in mind. $1,000 there, guys. Gold is flying. We might hit that 29.46 without a re-entry. Let's see. 15-minute looking very strong. 30 minutes strong. Hourly strong. So if we have a retest of 29.39, I will be adding. I'll actually trail my risk some more. So what this means is I've slowly but surely removed my risk as the trade has trailed to the upside, with the intention of reintroducing that risk to maximize the upside gain on the trade. So if it goes from here, not a problem. I don't mind at all. Obviously, I would have preferred to have a retest of 29.39, and that then will provide us with more opportunity to maximize those upside gains. Great volume kicking in there. Amazing volume, actually. But 8 o'clock in the morning, that is pretty much why I like, getting up early, getting a bit active. I usually do my runs in the afternoon, but if I'm feeling up for it, I'll do my runs in the morning, cup of coffee, and catching this volume this early in the morning is perfect because I can crack on with my day. My money's banked. I can go ahead and crack on with my day. I think the biggest mistake I made early on in my trading was thinking that you need to be sat at your desk all day, and that is something I can almost guarantee you. If you on this journey right now, there is going to be a point where you think to yourself, going full-time trading is going to make you a better trader, where the reality is you're still going to go through a very steep learning curve because you have too much time on your hands and you want to be trading all the time. And the truth is that is something that is not sustainable and it's not scalable. So for myself, I have found certain times in the trading day which works for me. I love catching this London volume early in the morning. I mean, it's 8:15 right now. I love catching that volume in the morning, then I'm done, right? Then I'm done. Hence the ideology behind trailing my risk so I can add to my winners. So very strong 5-minute candlestick closure there above 29.39. So flowing about, 50 pips in profit. Still looking for 29.46 there guys. Gold pushing there, 29.42. Seems like we might not get this retest. So I'm just gonna have to, don't really want to add up at the high. This is the only real other level. This is the only really other level where you could add. That then leaves us with about 30 pips for our overall target. So what I'm going to do is I'll just monitor price here And again, I can trail the risk there. So completely broke even in this position right now, but I'd love to reintroduce that initial risk. Perfect price would have been 29.39. The price is just launching. Look at that. Absolutely going for it. Flying. 29.43 there. Launching it. I hate to be short on this right now. I can guarantee you, I can almost guarantee you there are people based on this price action trying to sell gold. Crazy. So if we see 29.39, I'm gonna definitely add to this trade, and I'll have to place the stops of that position where my current break evens are. So it kind of balances that out. So if I am wrong, fine, not a problem. But if I'm right, then I'm obviously maximizing that upside gain. Come on, gold. What I can do is technically add and just halve the size, which is basically the same risk pips wise. So again, looking for 29.43 first area. If you simply look on the higher time frame there, this is a very strong level on the hourly time frame, 15-minute, excuse me, and the hourly. So looking pretty much for a break above that, and then we can ultimately target 29.49 overall. But again, for the purpose of doing this type of content, it's not to boast about the trade. It's none of that. This is simply to open your eyes to what I wish I knew very early on in my career, which was you're going to be wrong in the market. No doubt about it. You're not going to win every single trade. And with that being said, you want to know that what will make a very big difference to your P&L at the end of the month, end of the quarter, end of the year is adding to your winners. So think about it this way. Every time you win a trade, you win £2, right? Let's just say £2. Every time you lose a trade, you lose £1. But what if I told you there was a method that every time you won a trade, we could ensure those winners to be about £3.50. Every time you lost a trade, you will lose no more than £1. Why? Because you're trailing that risk. And if I entered this gold trade, for example, and gold shot down immediately, right? Shot down immediately, stopped me out. I would lose that initial £1 for the purpose of this example. However, because gold's going in my favor and I'm reducing that risk, so I'm trailing my risk, and I'm willing to add to the trade, my winner has the potential to now be £3.50. Overall, then if I look at it over the month, over the year, over the quarter and over the year, that extra £1.50 per trade is actually going to make a very, very big difference. All right, so try and keep that in mind. Trading, yes, you know, it's not guaranteed that you're going to win your next trade. However, if you put the odds in your favor by minimizing your downside, so if you're wrong, be wrong quick, right? Accept it. You're wrong. See you tomorrow. Come back tomorrow. Come back fighting for another day. However, if the trade's actually going in your favor, use that. Right? I'm pretty sure this will be the most valuable lesson you will have from the markets by just listening to that. So instead of the average risk £1 to make £2, which is great, you can still make money at the end of the month, end of the quarter, end of the year, you can still be profitable. However, to really exceed your growth as a trader, you want to put yourself in a position where you're actually maximizing the upside. All right, so try and keep that in mind. Let's look for this move there on gold. So 29.42, really trying to break out there. It is a bit slow. So if we have a break above 29.43, I'm actually going to cut the positions just so that we're not sitting here, yeah, just waiting for it really. But it does look like it wants to break out there. Actually, on that topic, well, if you're still watching, very early on in my career, looking at gold right now, it would be in these moments where I would initially want to get out of the trade and secure what I have already made on the trade. But with time, I then realized that what's the difference between a good trader and a great trader is one that can, milk as much as he or she can when the time is right. And I look at trading very similar to farming. As a farmer, if you know that your crop is only really going to grow once a year for 3 months, you want to try and harvest as much as you can in those 3 months. You want to make as much money as you can from that harvest, because that's what's going to keep you going through the winter, through the raining season, right? When you can't plant and you have no money coming in. And I think trading is the same thing. When you're coming to the market, there's no guarantee of whether this trade or the next string of trades is actually going to play out for you. However, when it is that season for you to make as much as you can, then in my opinion, you have to have parameters in place to do that. And for me, what that means is adding to the winners, because that is what will be the difference maker of my £1 and £2 story. So yeah, it's a very big difference maker. But looking for a bounce there, looking for a pop up on gold. If we do inevitably see 29.39, I'll reintroduce that risk again. But flowing about 800, 900 there this morning. And another one for the culture. So now technically I only have one lot exposed, 2 half lots, with a 50 pip stop loss, which is the break even of my initial 2 trades. So worst case scenario, I will then lose 500, which is fine. Less than expected. I came into the trade into today with the mindset that I'm willing to risk 1,000 in the market today. There was the 2 initial standard lots that we entered down here. Obviously I had a 50 pip stop underneath that on each one. So that's 500 each that I'm risking. Gold's popping up there beautifully now. If we break above 29.43, I'll introduce another half lot on that one. Nice little pop up there. So like I was saying, with that being said, I only have 2 half lots exposed. So if the market does absolutely plummet right now and I'm wrong, my initial 2 entries, unfortunately, will be hit at break even, which is fine. But I would have actually then lost less than what I intended to. So even better, right? Even better. It's a very controversial way of trading, but over my experience and speaking to people that have more experience than me, bearing in mind I've been in the market for 10 years and I've slowly developed these sort of habits and skills. However, when you look at individuals that I've spoken to with 20, 30, 40 years of market experience, their best piece of advice to me is add to your winners. That's a no-brainer to me. And especially when you think of the £1, £2 story that I told you, if you could be making £3 or £3.50 opposed to the average £2 that you would make, for example, just risk reward wise, RR, why not? Right? Why not? So try and keep that in mind. We really need a break above 29.43 there for this to sustain and for this to continue there, guys. Oops, what was that? Don't know why I moved that by mistake. So 29.43 is the price to watch. $30-minute wicking, which isn't great. Straight into 29.43, which isn't great. But we've got that London session volume kicking in there. Gold approaching all-time highs again, right? All-time highs again. So let's see. So a bit of a boring sideways patch here for the past few minutes. So 29.43 is the price. Make sure you sign up to my newsletter down in the description there, guys. And make sure you subscribe to the channel, drop a thumbs up on the video. I'm really going to go for it on this channel. I'm not going to hold back at all. I had a very big think, you know, on what I want to do with my previous YouTube channel. I had a different one. And yeah, I'm just going to go all in on this one. Start fresh, provide value, and literally make it a channel that I wish I came across when I started trading, which there wasn't much when I started. You know, I was drawing candlesticks on a pen and paper, on paper, excuse me, like a notebook, pen and paper. And yeah, it's the industry just evolved so much from there. And there's so much content out there about trading, but there's also a lot of rubbish. So yeah, let's see if we can make a difference. But gold breaking out there. I really need 29.43. I don't want to bore you too much longer. Hopefully we have this continuation. So looking for that move there. Hourly is looking strong. I actually feel still 30 minutes. We can still very easily on the hourly time frame close above 29.43. That will be massive for gold. Gold's really trying that. Excuse me. Nice little push there. So my camera seems to have died. Nice little push there on gold. Hopefully looking for a break above 29.43. And yeah, we'll look to ride this 29.46, yesterday's high. Now 1,400 floating right now. A break above 29.43, then I will be adding another half lot there and trailing the risk to the upside. So price is making a run at 29.43. So if you're still watching, thank you. Again, just remember, the purpose of me walking you through this video like this is to teach you how to manage the position, because it's so vital that you start implementing this into your trading sooner rather than later. Because if you can make a little bit more, I'm not even talking about doubling up or anything, if you can make a little bit more in your winners at the end of the month, that might be a difference maker for you. It might be the difference between making 500 and 1,000. Might be the difference between your 5K or your 10K month. So try and keep that in mind. Every little bit helps in trading, because maybe on the day-to-day P&L you might not realize it, but it does make a difference overall. So a nice little break there above 29.43. I'm gonna add another position there. What I will do is pull this risk. No, that's the wrong thing. Pull the wrong line. 43. Yeah, that's fine. So we'll pull our stop loss. We'll trail. Why does it keep doing that? We'll trail the risk on all positions now. So we've had that break above 29.43, which is great. Ultimately targeting 29.46 on the move. Price looks great on the 5-minute and the 15-minute time frame. 30-minute looks solid. 1 minute breaking above 29.43, like I mentioned to you a few moments ago. We are having that nice little move there. We've cleared these highs, so volume is picking up. What I will do is begin to trail some more. So floating 1,700 right now on these positions. So 29.46 ultimately is the end goal for us. That'll be 100 pips since the initial entry. But not only is it 100 pips, I've also added to the trade while trailing my risk, right? So if price had to stop us out right now, we'd probably lose around $200. Again, compared to the 1,000 that I wanted to start with, it's a very big difference. But not even $200 on the current positions that are exposed, but we still have these two standard lots that are running almost $700 in profit each. So we would end the overall P&L in profit. But again, if I can trail the risk, I'm going to do it, right? Keep that in mind. Come on, gold. 30 more pips, and that's it. You won't have to see me for the rest of the day. Let me know in the comments if I should start something up where you can trade live with me every day. I'd done that for about 2 years. I actually had a live mentorship where I trained people every single day. We hopped on live calls, which was great. I personally gained a lot from that because it gave me a platform to speak on. It gave me a platform to speak about my own psychology, my own bad habits, which again helped me become the trader that I am. So I might look at starting that up again. Just drop in the comments if you think that is something you would want to watch. Would you want to watch these positions? Would you want to get alerts when I take these positions? What would help you? Oh, that's the most important. So nice little 5-minute break above 29.43 there. This is a very big level. If you look left, the reason I had drawn this level on, because when we were trading above this level, price was bouncing on. Once we broke back below, we retested as a level of resistance. We've broken back above that. We've retested it now as support on the 5-minute there, pushing up higher. 29.46 overall is all I'm really looking for. And then I'll reward myself with another cup of coffee and a beautiful walk outside. Maybe a run. My runs I like to do in the afternoon because then it tires me out. I can have a shower or a Epsom salt bath because of my legs. And yeah, that's pretty much it. Nothing wrong with my legs, by the way, but when you run in long distance all the time, your muscles do experience fatigue. So it's something to keep in mind. So about 20 pips, 25 pips away there from overall target. So just looking for a little quick little push up on gold there. And we'll call it a day. I'll have another cup of coffee, and it's not even 9 a.m. It's the best part of this. So gold breaking out there, guys. So 29.45. Ten more pips, and we're calling it a day. Hope you've enjoyed this till now. If you have watched till now. So looking for 29.46, but I'm not going to get greedy either. That is something I want to teach you guys as well. When you're looking at the market, don't have this set price in mind, and if it doesn't get there, you're going to lose everything, and you don't control the market at all. I obviously have been following and trading gold for a long time now, understand the macro, the fundamentals, especially the overall theme that's happening right now. At the time of shooting this video, the Trump tariff war is what is driving demand for gold. We've seen central banks with the highest stockpile of gold ever. Central banks are just purchasing gold. There is that general demand for that safe haven. And again, that if I understand and I have that information at hand, I look at it as if I was on a trading floor like I was in the past, and I got given, let's take this for an example. I got given this paper, and on this paper says, hey bro, watch out for this. This is the narrative. Obviously not, bro. I'm just speaking to you. But hey, watch out on these headlines. This is what's happening. This is driving sentiment at the moment. Boom. If I got this little paper given to me, fine. I'm going to focus on that. I'm going to then think to myself, all right, I'm not going to look to sell gold. It was stupid. You got the headlines. And that is something I pride myself in doing, because I spend a lot of time putting in the work and the research for me to then be in a position where I can take advantage of these trades. So yeah, I've shifted to a long only for the past few months now. It is March. I've been buying gold since the start of the year, and it's been good. It doesn't mean I have to buy and hold, because obviously you're going to pay loads of swaps. But what that means is I can turn up to the market every single day. I can look for a position like we did this morning. I don't need the bottom. I don't need the perfect entry, because I'm willing to add, right? So try and keep that in mind. So 29.46. Hopefully we can get that there on the video. But if you have watched till now, thank you very much. I understand it's long. This may actually end. If it does end, I do apologize. But 29.46 can actually start trailing the risk some more there. If we break and close below 29.43, I'm going to cut the trades because my recording might actually end. And I want this to be as educational as I possibly can for you all. So if you have watched till now, subscribe, drop a thumbs up, and I will see you on the very next video. But if we have a break and closure below, let's have a look. Let's see. Give it a few more minutes. It's really trying. Oh, it's trying. I need another coffee. 29.43. We rejected it. Yeah, let's see if we can have that push up. It's trying. It really is trying. So we've had the break and closure below there, 29.43. Sorry, I was on my phone there. Yeah, I'm gonna cut the positions there. Let's actually see, come on. That's the annoying bit. It's so close. We've managed this trade so well. Sometimes you gotta take a deep breath and have some patience. Hourly looks good. We may have a bit of pullback on the hourly. May pull back into these lows. Are we really going to hit 29.46 now, this time in the morning, or are we going to pull back? I'm cutting the position there, guys. $1,500, roughly 1.4. Thank you so much for watching. It's been a good trade. I like how we managed it. I like how we trailed our risk. But if you have watched till now, thank you very much. Check out the link in the description below. Sign up to my newsletter. And yeah, perhaps one in the future, we can be trading together. Peace, much love, manage your risk. Trade safe. See you on the next one. Bye-bye.